Hello friends, Stacy Anfinson with your tour report market update for September of 2023. So let's dig into the data, see what we can figure out. A lot of this stuff is just going to be a continuation of trends that we've talked about before. First slide we've got up here is end of month inventory metrics. Bring up some bubbles for you up here, right? End of month ZOM, it's down 56% compared to the 18-year average, and 18 years is a pretty long time to develop an average over, so it's down a significant percent. If you go down to the bubble here on the left, the resale end of month inventory is down 67%. So we've talked about the dearth of resale listings, and that's just another statistic to do that. So yes, we're down between the 18-year average, but we're also down 22% compared to where we were in September of last year. So if you go back to the glory days of 2007, 2008, we see we're about 14,000 listings. And now we're about a third of that. So, and we've had a significant increase in population since then. So that's going to explain when we talk about prices, why prices have gone up. September average days on the market, 35 for September closed listings. The 18-year September average is 62. Once again, if you go back to the struggle bus years in 2010 through 2013, 115 days on the market, 116 days on the market. Very few listings are on the market for that long these days. Months of housing supply, again, another continuation of a trend here where the last time we were oversupplied was in September of 2011. September of this year was the 9th consecutive September with an undersupply of listings. Sales to original list price ratio, this metric was pretty consistent over time. If you go back through 2011, there we go, that's a struggle bus for 90%, but then for most years it's 97, 98%, but here in 2021, which was the first full year coming out of COVID, 105%, 101% September of last year, and now we're back to our normal average of 99%. Closed listings, this isn't going to be a positive one. September of this year, we're down 18% compared to the 18-year average, and we're also down 18% compared to September of last year. But not to totally depress you, if you go back to between 2008 and 2012, September of this year beat each of those years. So it may seem like September of this year is the end of the world, but it's not. There have been times when things have been worse, and hopefully we won't go back to those 2008 to 2012 numbers. Average sales price by month. Now, here we go. We talked about the undersupply of listings, and in the background, we've got this mortgage interest rate increase going on. But just, and I typically do a September to September comparison period, but I really wanted to look at what the average had done for this year. So here are our September averages overall, a little over 512. Resales at 496. So our resale September average is up 9% compared to February. So 9% compared to February of this year, and the resale is up 12% compared to February of this year. If you go back to September of last year, the overall average sales price was 4% lower, and the resale average was 5% lower. So we have had, in spite of interest rate increases, we have had house price metric increases, not to the extent that we had in 2020 and 21 and 2022, but they're still going up. And yes, you're probably, those of you that are astute, are probably looking at the peaks here in April, May, June, and July. Yes, I would note that, but I would also note that that is part of a historical seasonal pattern, which may explain some of this 9% increase. But I'd kind of focus on this 5% and 4% metrics compared to September of this year versus September of last year. Now, here's the one that's going to be mind-blowing for you. There's no seasonal pattern for this. You see the bars in gold of the monthly principal and interest payment based upon the average sales price during the month. You see in January it was $3,046. In September it was $3,617. That's down a little bit from the peaks in June and July, but it's up 18% compared to where it was in February. And those of you like dollars, it's almost $600 a month more. And so you're going, okay, how does this happen? How can this possibly happen where a home buying population can absorb that type of increase in monthly payment? Well, I call it fuzzy math. It's not really fuzzy math. It's just my way of trying to explain what's going on. So we've got 5 boxes here. I'll go over them one at a time. Mortgage underwriting. Approximately, you're going to need $13,000 a month in monthly income to underwrite that $3,600 monthly principal and interest. Remember that in our market, about 75 to 80% of purchases are with a mortgage. The rest are cash. So this is a pretty big key metric right here. So applied to that, the Raleigh Cary median MSA family income is $7,700 in 2022. That's the most recent data that we had. I really wish we had real-time income data, but we're about a year behind on that. So even if you pulled that up to $8,000 a month, you still have a huge delta between the $13,000 needed and the $7,700 that they're making income. So where does that come from? Well, in my opinion, it comes from three distinct areas. First off is Dow Jones Industrial Average, not necessarily that, but people that own stocks, and the Dow Jones is really the best indicator of how those stocks have done. It's up 5% compared to September of last year, but it's up 34% compared to September of 2018. That should say 2022 on that. So 34% increase in 5 years. That's a pretty nice increase for you. National home equity is the second source. Per CoreLogic, there was $287.6 billion in U.S. home equity at the end of the second quarter of 23. And then inherited wealth. Per the Federal Reserve, the average United States household inherits just over $46,000. Those of you that are out there practicing in the market, all these numbers could be significantly higher. And to me, it explains the delta between this. So yeah, you're only making $7,700, but if you've got $50,000 in a stock portfolio, $200,000 in home equity, and you inherited $100,000, all of a sudden you can afford a lot more in-house. So let's wrap things up. Total inventory down 22% compared to September of last year. Average days on market at 35 compared to the 18-year average of 62. So that's positive. Months of housing supplies, the 9th consecutive September in undersupply category. Closed listings are down 18% compared to September of last year. The average sales price is up 5% compared to September of last year. And to kind of wrap up the key point of what I'm trying to convey to you, the delta between qualifying income and a monthly PI comes from stocks, home equity, and inherited wealth. So that's all we've got for this month. I encourage you to subscribe to the TAR Reports at www.tarreport.com. If you like this video, please hit the like button, and I also encourage you to subscribe to the TAR Reports YouTube channel. So that's all we've got for now. Thank you for listening, and we'll see you next time.